Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look at the euro currency again. Although guys, I still think that some other currencies are more interesting for the immediate trading. For example, the Japanese yen is still very attractive for the trading. It has formed a really clear setup that could put the foundation for trading for some weeks ahead. But as you would like to return to discussion of the currency, so let's be it. Although currently, as you will see from this video, and if you will read the the weekly research, you will understand that this is a bit tricky situation on the euro currency, because compared to the Japanese yen, euro currency doesn't have some clear setup on the higher time frames chart. That's why it can't provide us the foundation and can't provide us the direction on the lower time frame. So when you have the pattern on the higher time frame chart, you know that the development, you know the direction in which you should stay, in which you should take the positions. But on the euro currency we do not have this issue. That's why in the euro currency we mostly will have to follow the price action rather than to drive on it. And that makes the overall situation is not as attractive, and it's a bit not as comfortable as it could be if you would have some pattern on the weekly time frame chart, for example. If you will read the weekly research, you'll see that the major situation now is developing on the weekly time frame chart, and the idea of this stands with this move to the downside, because this action to the downside is not very typical for the reversal, since market has formed. If you recall the previous analysis, then you will see that market here has failed to pass through the major significant monthly target, the 618 extension of the ABCD pattern on the monthly time frame chart. That was the first hit, reasonable bounce. The second hit, market has failed to pass through it, has shown the Russian rinse here and turned to the downside. Usually market should not bounce down from the 618 target, because this is the minor target. And this, as we have discussed previously, was able to put the foundation for a reversal to the downside. At the same time, recent price action doesn't look like reversal action. So if market is forming the reversal, we should see something of that sort, to the downside, some acceleration for it. But this mostly looked like the consolidation, the calling right below the significant resistance area. It takes the shape of the flag pattern on the weekly time frame chart. And that makes me think that market is not done yet with the possible challenging of this resistance. Second moment is that market has held above the yearly pivot point. As you can see, on the previous week the market has bounced up precisely from this area. That also was and is, if you will draw the fib lines, fib levels here, you will see that this is also the significant fib level. But still, that is also the yearly pivot point. And from that standpoint, market currently holds above the yearly pivot point and has moved above the monthly pivot point. That tells that long-term sentiment of the market holds bullish. That's why the recent action doesn't vanish the possibility for further upward continuation and for another breakout attempt of this area. Trend holds bullish on the daily time frame chart. On this picture we see that market could follow by this A, B, C bottom pattern, and the nearest target will stand around 138.50 area, the 618 extension. Although now it stands beyond the overbought condition, but when the market will start move high, the overbought level will also be adjusted. But still, this is a bit extended object for us. What is more significant right now is this general price action to the downside, and particularly we'll see another pattern on the 4-hour time frame chart that will become the core, the basis for our trading, for our analysis of the euro currency on the common week. First of all, take a look at downward action. Market is forming the lower highs and lower lows. That is the move down. Here was an attempt to create the reversal swing. Market has failed and has shown a move down that has taken out the previous lows, and this reversal swing has been vanished by the price action. Hence, the first object to watch for here is the reversal swing on the daily time frame chart. And here's the reason why it should and could appear on the euro currency. So on the 4-hour time frame chart, the inner pattern to this consolidation on the daily, to this rectangle, or you could treat it as the flag channel or something of that sort to the downside, we have inner triangle pattern. That broadening triangle, you could treat it as the broadening bottom. It's absolutely the same in the current situation. So if this is really the broadening triangle and broadening bottom, the breakout point will be estimated by the direction. So if market will take out, market for breakout to the upside should take out of these highs and continue move high, because right inside of the triangle market has formed already the fifth waves over the first, second, third, fourth, and I suspect that it has passed through the ultimate bottom of this pattern. Also, guys, theoretically we could get the diamond pattern, but as you know, I do not like to speak about it too much because this is very rare pattern on the markets. I just pointed for your to attract your attention that you just could keep in mind that that's it in general possible. But I think that we should be focused on this upward action. If market will form the greatest swing to the upside, that could be the reversal swing, the weekly pivot resistance one will take the special meaning for us, because if this will happen, market will take out of these highs, market simultaneously will pass through this weekly pivot resistance, and that by itself will confirm the starting or existence of the long bullish trend. That this move to the upside is not just a retracement. This will be the bullish trend if market will pass through this area. Okay, so all our attention, all our trading setup, trading plan will be linked with this recent swing to the upside on the current week, on the common week. And there are two possible ways to deal with it. That probably will be our invalidation point, because that's your pivot point, that's the bottom of this potential pattern, and if market will pass through it, it will just tell us that it's not the reversal, and we will need to search for another setup here. But until that will not happen, the market now is forming upward action, trend holds bullish here on the daily time frame chart, we will stick with this upward motion. So there are two ways, as I said, to deal with this. First is the conservative tactics, is to wait when the reversal swing will be formed, because you do not need to hurry to take the position in advance of this potential reversal swing, because when the market forms the reversal swing, very often you could say as a rule shows the deep retracement after that. And the first tactic suspect and assumes the taking position on that retracement. That's the first way to deal with the euro currency. The second way is the aggressive tactic, and it assumes that market still has to pass the significant area to the upside, significant distance to the upside to form this reversal pattern. And why we should not use this and we would not try the taking the long position, a scalp long position to ride on the rest part of the potential reversal swing here. And if market will form this reversal swing, later we will decide what to do with it, either to take the profit, wait the retracement and switch to the first tactic again, or just tighten our stops and wait for what will happen. So that's a lot of different possibilities will be, but the first idea is to trying to take the position to ride on the completement of this reversal swing. So if you would like to choose the second way, the level that you could watch for as potential level for long entry is the area around weekly pivot point. So you can see that's also natural support resistance area. So the support, 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 breakdown, resistance, again support. So that is also the natural support resistance area. So if you will take a look at the hourly time frame chart, you'll see that is also the confidence support, stands around 135.80, 135.85, 86 area, right around the weekly pivot point. And if this is really the reversal swing, I suspect that market should hold above it, especially if taking into consideration that former upward action was really fast on the non-farm payrolls release. So this retracement down probably should hold and market should continue to move higher. If again this will be the reversal swing, that's in fact the major risk factor. That if this will not be the reversal swing, you will probably be stopped out. That is the major difference with the conservative tactics, that it assumes to get the reversal swing first and enter on the retracement second, and it will not try to anticipate the reversal swing. While aggressive tactics assumes that this will be the reversal swing and trying to take position in advance of the completion of the pattern. So you can see the current setup on the euro currency is not really the tremendous setup. It's not the thrilling setup. And as I said, the euro currency is not as attractive for trading as other currencies right now. Well, since the situation stands in the large uncertainty on the high time frame chart whether euro currency will continue to move higher or not. You will find a lot of different contradictive patterns that have been formed on the weekly time frame chart. That adds even more uncertainty. That's why all that we could do here is just to stick with some short-term setups. Even here we do not have some trigger on the directional patterns. We have just some big pattern that could become the reversal one and trying to do something inside of this pattern. So that's why, guys, as I said, the euro currency, well, I think that's much more possibilities for trading exist on other currencies than on euro currency. Still, as we have dedicated this research to the euro, that's our setup and that's our trading plan for this currency pair. So let's see what will happen, and maybe market in the beginning of the week will form something that will give us more bright moments for trading here.